sides. You have the sponsor and you have the investor, and the sponsor wants investors and the investor wants the sponsor. They both work together. The investor is going to get 6 to 8%, and it's with equity, and there's lots of benefits with that, tax benefits as well. And then the sponsor, they get to work on tons of projects. So it's really just a win-win. Good morning. Here we are going to talk briefly about real estate syndications, what you need to know about it, just really briefly. So before we get going, I'm Michael Wander, CPA, and my pleasure. First of all, how do we move this thing forward? What's going on? There we go. Okay, we're going to go over the payment summary. There's going to be the sponsor and there's going to be the investor. That's the sponsor. That's the investor. Don't they look like lovely people? Now, the sponsor is going to get a number of payments from the whole syndication. What is a syndication? A syndication is when a sponsor or somebody finds a real estate deal and they need money for it. So they have to go out and they get investors. Now, what's going to entice the investors to come work with them, and what's the benefit to the sponsor? So the sponsor, they're going to get something called a management fee. They're going to get a split, and they're also going to get other types of fees, finder's fees, etc. The investor, they're going to get a preferred rate as well as the split. I'm going to go into these other items briefly, what all of these terms mean. So first, what we have is the sponsor. The sponsor, they're going to get a finder's fee. When they find the property, they're going to get a fee for it. And when for managing the property, different types of management, asset management versus the actual managing of the property itself. We won't go into those details. A financing fee if they obtain the loan, a disposition fee. They can get a whole number of fees. There can be a split, right? There can be a 20-80 split, 50-50 split, and really all of these fees and splits, they are not set in stone. The amount or the rate or the ratios, the rates. It's just something that you negotiate between the investors and the sponsor. Now, as far as what the investor gets, the investor is going to get a preferred rate. It can be again, it's totally negotiable, but I've seen it generally around the 6 to 8% range, and they also get the split. Now, what exactly is the preferred rate? I'm going to talk a little bit more about the investor and the preferred rate and the split. The preferred rate is going to be the interest rate. It's going to be the rate that the investor gets in relation to the capital that they have invested for their equity in the project. For example, if an investor gives $100,000 in equity towards a project, their preferred rate will be whatever the percentage is. Let's say it's 8%, they would get $8,000 per year that their money is tied up. Obviously, the property has to be viable, it has to be profitable, but assuming that, then they would be getting their 8%, and they could get it really at any time. There could be a refinance that occurs, or it could go at once the property is sold, or if it's going to be rented out. There could be a number of different ways of negotiating that. As far as the split goes, so after all of the fees and the interest is paid out, whatever the leftover net income is, whatever the gain is, let's say they sold the property, whatever that gain is, that amount, that gain, that net income would be split between the sponsor and the investor. Again, just all up to negotiation, whatever the two parties can agree upon. So that, in a nutshell, is that's why the sponsor has a split portion as well as the investor has a split portion right there. So I hope you found this informational, and that is pretty much it. That's all we have for today. So again, what's it called? A syndication. This is a real estate syndication. I'm Michael Wander. If you have any questions, and it's really interesting, this syndication, because it really allows people that have no experience in real estate to partner up with real estate investors, to partner up with people who are experts in the field, and to really be able to get a hand in, and to learn about and to just play a role in that market, in that industry. So it's a way to entice, to get them to invest, right? So and as well at the same time for the sponsor, there's a what's the incentive? That's the word I'm looking for. Incentive for the sponsor is that they want to they want to work on projects, right? They have 20 projects they want to be working on. They can't by themselves afford to fund and pay for all those projects by themselves. So they have to get investors. They have to get investors. So that's pretty much the benefit and the incentive for both sides. You have the sponsor and you have the investor. And the sponsor wants investors and the investor wants the sponsor. They both work together. The investor is going to get 6 to 8%, and it's with equity, and there's lots of benefits with that, tax benefits as well. And then the sponsor, they get to work on tons of projects. So it's really just a win-win for all. Now you want to be careful. You want to make sure that the accounting is done correctly, that you know what's happening, that the sponsor for that project, you trust them, you know them, because you're really depending upon them. You really are counting on them to do the accounting correctly and to tell you exactly how much the project cost. Right? If they're overspending, if there's anything fraudulent going on, you're not going to be getting, your 8%. Maybe you'll get your 6 to 8%. Maybe if it's profitable. If it turns out that it's not profitable because they've been spending on way too much stuff or embezzling, then you're not even going to get that. So that's just an aside. You just want to make sure that you know who you're going into the project with. So that's with anything in business, though. Anyways, I hope you found this informative, and feel free to reach out if you like. Wander CPA, that's my business, and you can email me at info@wandercpa.com. Thanks.